Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at technology stocks. So right now, the Nasdaq is pulled back, and then it's trying to find support, and it looks like it's setting up for a bounce. And so we have several technology stocks that have formed bullish reversal patterns. And so if you take a look at Amazon here, ticker symbol AMZN, you could see it had multiple red candles in a row, and today there was a nice bounce off of the middle Bollinger Band, currently at 1540. As long as that level holds, the uptrend is intact. If this dotted purple line breaks, the downside risk is it could come down and test that 50-day simple moving average, similar to how it did back in February. Today, bullish one white soldier reversal pattern formed. So this is a nice reversal pattern. We'll see if it can be confirmed. The closing price on the 12th is the key level to break. So this could possibly, if there's a positive reaction to the news tomorrow to the FOMC meeting, then this could possibly close above 1600. That's the key level, and possibly make an all new time high. If it fails to break 1600, that's going to signal a temporary top. If you look at the Amazon 15-minute chart, you can see here it bottomed out on the 19th and it came back up, and now it's currently trading above all the moving averages. It's hitting resistance over here on the 16th. If it can break above this level, this red line here at in the 1587 level, then it could come up here and retest the high. So you can see that the high close on the 14th here is right around 1603, and so that's going to be the big level to break. That's the target to the upside. If it drops below that 200-day simple or 200 simple moving average at 1579, that's going to be a red flag. It needs to stay above the simple moving averages. Okay, take a look at Nvda. Okay, yeah, so this had a really nice bounce today as well. It did form a bullish reversal pattern, and so bullish one white soldier reversal pattern formed, and so this was a nice bounce off of the ascending support and the 50-day simple moving average here at 23684. If it can get above the closing price from last Friday, that would be a new all-time high close. So this is set up to make a new all-time high close as well. It's hitting that level. It's either going to top out here, or it's going to break out higher. It's hitting that key resistance level that it's hit multiple times. If it drops down below 240, that's going to signal downside risk. That would put the 50-day simple moving average on deck. If that level breaks at 236, then you could see a big drop down to that 100-day simple moving average at 219. Okay, so that was the bullish one white soldier. And then if you look at the 15-minute chart, this had a really sharp bounce. It bottomed out yesterday, and then had a really sharp recovery, gave back, ran all the way back and above, and then now it's back here hitting the resistance from the 16th, and then if it can get above that, you're looking at the high close from over here on the 13th at 253.50 as the big level to break. Right now it has a very strong uptrend on the 15-minute chart. It just needs to get through this 251 resistance level and then through that 253.50. Okay, let's look at Intel. So Intel made a nice bounce today as well. It did form a bullish reversal pattern a couple of days ago. It formed a bullish Harami cross reversal pattern, and so the doji was signaling the bounce, but it did pull back lower. It's trying to confirm that pattern. It needs to get past the halfway point on this red candle, and that would confirm the pattern. The closing price here on the 9th is the key level to break. A close above that level should signal it wants to break out higher. If it drops below EMA 13 at 50.68, that would be a red flag, the orange line. As long as the middle Bollinger Band at 49.94, basically 50, is holding, then the uptrend's intact. Okay, so if it breaks, that would be a red flag signaling that it possibly could consolidate. Right now it's intact. It just needs to break out. So Intel is set up to possibly make an all-time new high close as well. If you look at the 15-minute chart, here it is hitting this resistance. Okay, the intraday top resistance. If it can break above, then you're looking at 52 is the big level to break from the 14th, and then over here on the 13th, way up here, in the 53.50 range, it is going to be the big level to get above. So first things first, it needs to get above this 52 zone, and then 51.50, and then 52, and then work its way higher. It does have an uptrend going. It needs to hold the middle Bollinger Band. It needs to stay above 51.50. If it dropped below, that would be a red flag that it's maybe not ready to head higher. And then if you look at Netflix here, so Netflix had a nice bounce today as well. It pulled back, with multiple red candles, and then it had a nice bounce on light volume. It was a very small candle that formed today, but bullish engulfing reversal pattern formed. What needs to happen is it needs to close above EMA 4, currently at 317.34. I guess it actually closed just above that level, and so it needs to stay above EMA 4, and then it could work its way back up to test that all-time high close. That's the closing price on the 9th here. If it can get above that level, and then once again, Netflix is set up to possibly retest that all-time high close level. Now to the downside, if it fails to hold EMA 13, you can see the orange line has been holding during the pullback. On the pullbacks, it could come down to that middle Bollinger Band, and so the middle Bollinger Band is currently at 307.59. The drop below that would be your big clue. Okay, yeah, the chart has broken down, and then it could drop down to that lower Bollinger Band and 50-day simple moving average at 273. As long as the middle Bollinger Band is holding similar to how it did over here in February, the uptrend's still intact. Okay, so then if we look at the 15-minute chart, you can see it's trying to break out from this downtrending channel. It's hitting the top of it, and so if it can break above the ascending resistance line and then above the 200 and 300 simple moving averages, basically a 320 and above for Netflix would be very bullish. If it drops below the middle Bollinger Band at 317, that's going to be your red flag that it's cooling down, and then the chart will be broken if it drops down into the 314s. That would be below the 50 simple moving average. So it needs to stay above these moving averages and then bust above that 200 and 300 on the 15-minute chart, and that'll be the clue that it wants to head higher. Okay, so let's look at Apple. So Apple had a pullback as well, and it had made that all-time high close. It had that epic run from the bounce off the 200-day simple moving average, and then it came back, and today it formed a doji, and so when during a downtrend, when a doji forms, many times that signals the bounce is coming, and so you have a bullish doji star reversal pattern from today, and that's a really strong reversal pattern. Many times this pattern is confirmed. We'll have to see if it follows through here. It does show indecision, but it shows tight trading. There was a stalemate today between the bulls and the bears. What levels you want to keep an eye on are EMA 4 at 176.45 and that middle Bollinger Band at 176.93, basically 177. So if Apple starts trading above 177, that's going to be your clue. Okay, yeah, it's bullish again. And then you have the high close here on the 12th as the key level to break up here right around 182. And now if it fails to get above 177 and that turns into resistance, then that's going to signal downside risk, and you could see the 50 and 100-day simple moving averages tested down here at 172 and 171. Okay, that's the bullish doji star. And then if you look at the 15-minute chart, you can see this really got driven down. I mean, look at that pullback. And so what it's trying to do right now is get above the green line. That's the 50 simple moving average at 175. And so if it gets above that level and then above the middle Bollinger Band at 175.65, those two levels, that's when it signals, okay, the chart's back in play. And so you can see it almost got above today. Look at the volume spike end of day. It looks like some people are trying to load here for a possible rally tomorrow. We'll have to see if it can follow through. If it's forming candles below the green and dotted purple line, it signals it's a risk to hold. It has to be trading above those levels to head higher, similar to over here on the 9th and the 12th and the 13th. When it was running over here on the 9th and the 12th, you can see it was above the green line and above the dotted purple line, and then as it's heading lower, the candles are below the green line and below the dotted purple line, and so they're trying to get back above, and that'll be our clue that it's ready to head higher. Okay, let's take a look at Micron here. So Micron, the markets have been under pressure, and Micron's been pushing higher. This is a really strong chart. I mean, look, you still have RSI at 77 and Fasto at 87. It did not correct. It's still riding EMA 4 support higher. This has been an epic run. As long long as EMA4 at 60.27 is holding, the signals to keep riding. You know, it just signals that the chart is super strong. If that breaks, then you could see it pull back to test EMA8 at 582. You could see today it closed above the closing price from Friday. That signals more upside potential. Okay, so that was exactly what the bulls wanted to see. And then now you have the 62 level as the next big level to break. So yeah, this is a really nice move by Micron. It keeps pushing higher. So congrats everybody. Yeah, it did form the bullish kicking pattern here. Yeah, basically the bottom line is that this is pushing higher. It's got a nice uptrend. As long as the EMA4 holds, the signal is to keep riding. Okay, let's look at Facebook here. So Facebook had a big pullback. I wanted to show you this chart so you can see this 300-day simple moving average clearly. So it's bouncing right now off of the blue line, and that's the 300-day simple moving average at 161.7. Look at that huge volume here. So it does look like there were bottom feeders off of this 161, 162, the 162 zone, and so if that level holds, this could be where it gets the technical bounce. Notice today's candle is floating below the lower Bollinger Band. The lower Bollinger Band is way up here. Okay, so when a candle is forming well below the lower Bollinger Band like that, that signals it's an extreme oversold condition. If we look at Fasto here, you know, you can see, well, it did bounce though. It is at 25 on Fasto. Well, that's because of the long lower wick on today's candle. They drove it up, and so that signals that you know, that even though it was down on the day, the bulls were strong into the close. You know, they closed it closer to high of day than they did towards low of day. You know, there was bottom feeders. And so what you're looking for now is the candles working back into the bands, and then you know, this 200-day simple moving average at 172.61 is going to be the big resistance level to get back above. If that turns into resistance, you know, that could signal the top of a technical bounce, and then it could continue riding EMA4 resistance lower. So basically, it has to hold the 300-day simple moving average, and it has to get back above the 200-day simple moving average to get the reversal going. If we look at the 15-minute chart, you can see here that it you know, had the big gap down, and so you have the space between the low of day on the 16th and high of day on the 19th, and so they drove this thing down, and then now it's getting above the middle Bollinger Band. It's above the dotted purple line, and so that's how you start a reversal. It tried to get above the dotted purple line on the last candle of the day yesterday, but it failed to hold with that gap down. And you can see the gap did fill with this upper wick, with these two wicks filled the gap, and then yeah, and then it worked its way back up. So basically, all you need to know is this green line right here. Okay, so 169. All right, if you see Facebook trading above 169, that should signal that the bounce play is happening, and then you could see it run up to the bottom of the gap. And notice how the bottom of the gap is nicely lined up with the 100 simple moving average zone. I guess the 100 simple moving average is a little bit below there, but those would be the two targets. Would be this 176 to 177 level, and so you could see a run between 168 and 176, and still have the daily chart, you know, still be a piece of junk, but you could get a nice technical trade. You know, that's some good, you know, if you're writing some calls between there, that could make some nice money. So let's keep an eye on that. And then let's look at Google here, GOOGL. As you can see here, it's bouncing as well. It had the big pullback, and so it's hitting the 100-day simple moving average at 1085. If it can hold that level, then it could get the reversal going. You know, it could work its way right back up to this EMA4 at 1,113. It needs to get back above that level in the middle Bollinger Band to get that uptrend going. If the middle Bollinger Band and the 50-day simple moving average basically at 1120, you know, remain resistance, that's going to signal you know, possible downtrend. Has to get above those levels to get that uptrend going again. You're going to know whether or not the chart's breaking down by whether or not the gold line holds. You know, that's this 100 200-day simple moving average. If it breaks, the downside risk is it comes down to the 200-day simple moving average and test support. Okay, so if you look at the Google 15-minute chart, you can see here it's trying to get the reversal going. It really channeled out down here. It formed a tight channel, trading for the last 2 trading days, basically. And so now what it needs to do is break out above the top of the channel. It's trying to break above the 50 simple moving average. It's trying to turn the middle Bollinger Band, that's the dotted purple line at 1094.50, into support. And then it's trying to get above the green line, which is at 1096. And so if it can get above both those levels, that's our signal that, okay, yeah, this is the start of the reversal, and then it has to stay above those levels. And then it needs to get above the high close of the channel, which is right up here. And then once it breaks above that level at 1102 or so, then that's going to be your signal it's ready to head higher. And it could, retrace back up to that 100 simple moving average at 1120, basically 1119.77, and then to this. Notice how that is lining up perfectly with the gap, or with the the 100 simple moving average is lining up perfectly with the bottom of the gap. So you have a gap between low of day here and high of day here. And so yeah, you could see if the 50 simple moving average turns into support, then the trade is between this level and this level, or maybe the top of the channel and that level, okay, but above 1100 to 1120, which would be a nice trade. And then if you look at TWTR, and then if it gets above the gap, and then it could head higher, but we'll talk about that later. And then let's look at Twitter here. So Twitter got really crushed today on that Israel news, and so yeah, it seems a little overdone, down 10%. If you look at Fasto, that's an extreme move. Let's see what happens previously. When Fasto got down here before, it bounced pretty good. So right now, if they shake it out a little more, it is on a 4-day drop. Notice it did get the lower wick off of the lower Bollinger Band there, so there were some bottom feeders. Basically, you should get a technical bounce off this 50-day simple moving average. It bounced off of that level in January when it got hit, so I would be looking to load in that 29.50 to 30 support zone. It could try to bounce off of 31 here. It's got 4 red candles in a row, a big volume spike today. It looks like some people were loading. Keep in mind, if it fails to get back above that middle Bollinger Band at 33.88, that could signal the possible start of a new downtrend. To the upside, if it gets a nice bounce, you could possibly see this kind of move. I don't see it getting right back above. It's going to take a little work to get back up there. Yeah, look for a bounce. It's got to set up for a technical bounce very soon, possibly tomorrow. And then if we look at Snap here, okay, last one in this video. So this is pulling back. It has 4 red candles in a row, and so it looks like the target here is right here at the 200 and 100-day simple moving averages. Basically, if it hits that 1534, 1535 level, that should be the technical bounce level. Not sure if it's going to get there. Maybe when the Fed's talking tomorrow, they'll pull these things down further, and then maybe it'll bounce. It looks like they're trying to bounce right now. It is forming. Today's candle did form below that lower Bollinger Band, so the candles could work back into the bands, and what it needs to do is get above EMA 4 at 1658. Once it gets above that level, that's when it can get the reversal going. It has to get above the middle Bollinger Band at 1747 to get a new uptrend going. Notice how the dotted purple line, how it's been resistance all through here, failed to break. So yeah, and that signaled that the downtrend was intact, and so right now it's in a downtrend, but it's hitting this level where it could get a technical bounce. And so yeah, keep an eye on $15.50 to $16. Basically, if it hits that 15.30 level, I bet you're going to see some buyers. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out our chat. I'll post the link below the YouTube video. Thank you.